to be using something called a sinking funds calculator. Okay, now to use this calculator, okay, what we need is the future value. So essentially, the difference between this calculator and the last calculator that we talked about in the last video is that in this calculator, you need a future value to calculate how much you need to pay at the end of every year or at the end of every period, okay, to get that future sum. Okay, so essentially you're calculating your periodic payments. Okay, so let's say your future value is 200,000. Okay, this is, let's say, for a worn out equipment at your factory, at your warehouse, at the equipment that you're working on. Okay, so let's say this worn out equipment needs to be replaced. Okay, this equipment is depreciated, it needs to be replaced, it doesn't work, there's a problem. Okay, now if it needs to be replaced, okay, the person, let's say the company or business is owned by shareholders. If the company or business is owned by shareholders, usually what happens is the shareholders go on to actually pay for that equipment or that machinery. Okay, so when they pay for the machinery, they can't come up with the payment all up front. Okay, so what they're going to do is they're going to come with lump sum payments. Okay, so if they know that there is a problem with machinery, let's say a couple of years in advance, okay, let's say this is $1 million machinery or a machinery that's worth $200,000. Okay, so that machinery, if it needs to be replaced, okay, the shareholders, let's say they're gonna put this money, okay, into the bank at a certain rate, okay, to be compounded every year. Okay, so now we need to figure out what is the lump sum payment, what is the periodic payment that the shareholder, let's say you are a shareholder, okay, or someone you know is a shareholder, okay, and the equipment that you're working on, okay, is the one that is giving you problems. So what is the money that you need to deposit, or what is the periodic payment that you need to pay at the end of every period to get your future value? In this case, our future value is $200,000. Okay, so let's say in the bank, this $200,000 is compounded at 8%. Okay, and the machinery, you know, will only work for, let's say, another 6 years. Let's say it started giving you problems already, and you know that this machinery is only going to last another 6 years. So you're going to put this amount as 6 over here. So you want this machinery replaced after 6 years. Okay, so you need to come up with this amount over here of 200,000. So you're going to say 6 years. Okay, so notice that this calculator automatically calculates the periodic payment. Okay, so this periodic payment comes about 27,260 at the end of every period. Okay, so at the end of every year in this case. So at the end of every year, okay, the person or the shareholder, okay, needs to deposit $27,260 into the bank to get this future amount of $200,000 to replace the machinery at your workplace, at your factory, at your warehouse, at your office, whatever it might be.